It's Monday, the 1st of November 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
The UN Climate Change Summit kicks off, but already the big emitters are wavering on hard commitments. That's our main story. Also this morning, James Packer says he'll sell down his Crown stake, Macquarie Group doubles its profits, and borrowers rush to fix their home loan rates. Then stay listening for Sean's chat to Steve Johnson from Forager Funds Management. But first, Sean, we have been waiting for months for the UN Climate Change Summit in Glasgow. There's been plenty of talk, plenty of pressure, and it kicks off today. How likely is it to actually be successful?
Well, it hasn't gotten off to a great start, Michael. The G20 meeting was held in Rome over the weekend, which Scott Morrison attended, while the UN Secretary-General Antonio Guterres called on the G20 leaders to reach agreement over phasing out coal-fired power stations by 2030. That's pretty much been rejected. Instead, it looks like the language out of Glasgow this week will be about reaching net zero targets by around the middle of the century, not specifically 2050, as has been the case until now. There's a bunch of challenges. India, one of the world's largest emitters, has ruled out a net zero target by 2050. Just how much support US President Joe Biden has domestically for his massive climate change spending is unclear. And while China has set a net zero target for 2060, it hasn't said how it will get there. India, US and China are the big three in these negotiations, along with the EU, but we know the European Union is much keener to reduce carbon.
What about the likelihood then of a global carbon price, whether that be a tax or an adjustment mechanism?
There's certainly been lots of talk about it. Matthias Cormann, the OECD secretary, who was finance minister under successive coalition governments in Australia, said he's always had a consistent view on carbon pricing and has been calling on countries to adopt a carbon price. Of course, when he was in Canberra, he rallied against the idea. I'm not sure how consistent he's actually been. But domestic politics won't allow our Prime Minister to even suggest a carbon tax. So I think that's an option that's very unlikely to get a run in Australia.
And how do you think Scott Morrison is going to go with French President Emmanuel Macron, given we dumped the $90 billion subs deal last month?
Well, we know last Thursday night Mr Morrison had his first conversation with Mr Macron since Australia cancelled the subs deal. Mr Macron criticised Mr Morrison for a breach of trust. He also said Australia should do more to combat climate change, obviously not happy with Scott Morrison. Then over the weekend, Joe Biden described Australia's handling of the subs debacle as clumsy. Fair call. Mr Morrison hit back yesterday saying Australia had made the right decision in our interests. Certainly he enters this week not looking quite as chummy with Mr Biden as he did a couple of months ago, and very much on the back foot when it comes to climate change.
Yeah, and the first photos of the Prime Minister meeting the French President looked a little bit awkward. I know they were just bumping into each other, but still the body language, not great.
Apparently Mr Morrison actually sought out Mr Macron to have that handshake, and I'm not sure that it actually achieved the goal he wanted.
No, a bit too keen, I reckon.
I suspect so.
So how did markets perform over the weekend?
Well, the S&P ASX 200 finished down almost 1.5% on Friday to 7,324 points. Bit of a bloodbath, really a broad sell-off with only the materials and healthcare sub-indices not losing at least 1%. Real estate stocks were sold off hard on the back of rising bond yields, so too telcos, financials, energy and technology companies. All the banks fell. National Australia Bank was down 2.5%. Commonwealth Bank and Westpac dropped more than 2%, while ANZ was off 1.6%. But there was red ink everywhere. Wesfarmers, Telstra, Goodman Group, Rio Tinto, Aristocrat Leisure, Xero, QBE Insurance all fell by more than 2%. That is what you call a widespread sell-off. The only top company that gained ground on Friday was CSL, up 0.2%. Interestingly, Wall Street finished slightly higher over the weekend, notwithstanding disappointing results from Amazon and Apple. It meant the S&P 500 finished the month up almost 7%. That's the best in a year. Of course, most of the action in financial markets at the moment, Michael, is in fixed income markets, with yields soaring over the past week on expectations that interest rates around the globe, including here in Australia, will start rising.
All right, we'll be back in a moment with the rest of the day's business news. Sean, plenty of stories around this morning. James Packer told the WA Royal Commission on Friday that he will comply with the Victorian Royal Commission's recommendation to cut his shareholding back to less than 5%.
Yes, it was a recommendation in the Victorian Commission, though one the state government didn't say it was prioritising. Mr Packer's stake in Crown is worth around $2.4 billion, but he wants time to complete the sell-down. The Royal Commission said it should be done in 3 years, but Mr Packer wants 5 years. He said he'd still buy a penthouse in the Crown building in Sydney, even if he did sell down. Mr Packer's appearance on Friday included a defence of the group's oversight of management in its Perth casino, even though he did agree the parent group had a poor governance record. Now, Michael, I like this example. Mr Packer was chair of Crown Burswood in Perth, but he didn't attend a board meeting in 3 years. The Commission asked him whether he thought that was fair. He conceded it really wasn't, and he should have stepped down. He also agreed that risk management structures at the Perth casino were defective.
That's pretty extraordinary. So where's Crown up to now then?
Well, its shares sold off late last week after the initial 10% jump back on Tuesday when it found out it could keep its Melbourne licence under supervision. Its New South Wales licence is still up in the air, but Mr Packer selling down will actually help that process. And the Western Australian Commission keeps going on. We'll have to wait and see where that gets to. I actually wouldn't be surprised if we wake up at some point and Mr Packer's done a deal to get out totally.
All right, we'll wait and see on that one. Now, Macquarie Group has doubled its profit for the 6 months to the end of September and wants to raise more money off shareholders.
Yes, the country's seventh largest company on Friday said it had made a better than expected $2 billion net profit for the half year, but it needs extra cash to support its fast-growing home loan business and also to invest in opportunities around the globe, hence the capital raising. The company announced a much bigger dividend compared to what it paid out in March, though it's not back to pre-pandemic levels. It's been a remarkably successful company for many years, Macquarie. At the moment, its home loan business is doing really well, as is its funds management operation and advisory business. However, it still runs into trouble at times, and it does have a bit of a history of this. Earlier this year, the Prudential Regulator criticised Macquarie for poor risk management and multiple breaches of regulatory standards, big no-nos in the world of banking. It was told it had to hold extra capital against its lending as a result, and that's part of the reason why they're doing the capital raise. Macquarie share price is up more than 30% in the past 6 months, though, so clearly investors like its story.
Sean, earlier you mentioned everything that's been happening in bond markets lately, and as a result, there's been a rush for fixed-rate loans.
Sure has. Fixed-rate loans are priced off bond yields, and these have risen in response to fears about inflation, so borrowers are trying to get in and fix their home loan rates before they go too high. Fixed home loan rates have already started rising, though they still remain relatively low on a historical basis. Now, there were plenty of stories over the weekend in the media predicting house price falls. Modelling by Digital Finance Analytics said if mortgage rates jumped by 25 basis points, which isn't much, and the new higher lending buffer is introduced, which it will be, home loan prices could actually fall. AMP Capital Chief Economist Shane Oliver said if we get 2 rate hikes at the end of next year, which he expects, house prices might stop rising. Of course, they've been surging over the past 12 months, and a pullback isn't necessarily a bad thing. We'll find out more today about what happened last month when CoreLogic figures are released.
Let's have a quick look at the latest COVID news, Sean, and cases are continuing to fall.
It's really good news. Just over 1,000 cases in Victoria yesterday, although sadly there were 12 deaths. 80% of Victorians are now fully vaccinated. In New South Wales, the number has dropped below 200 cases. New South Wales is close to an 88% full vaccination rate. Now, one thing, though, to note, we're all very excited about international flights reopening today. We've spoken a bit about that, but there's probably not enough of us that actually want to take a flight today. So Qantas has pushed back the start of its first post-pandemic Melbourne-London flight for a couple of weeks due to a lack of interest. And plans to resume flights into Queensland have been delayed because of the slow vaccination rollout in that state. So, Michael, we're all very excited about it, but no one actually wants to jump on a plane.
Okay, Sean, what's making headlines in today's news media?
Well, there's a bit around this morning, Michael. The Financial Review is reporting that Canada's Brookfield is set to sign a binding deal to buy Australia's AusNet services after increasing its all-cash offer to more than $18 billion, including debt. Rival bidder APA will now be under pressure to make a higher offer. There are also media reports that fully vaccinated Singaporeans will be allowed to travel to Australia without quarantining from November 21 as part of the federal government's efforts to restart tourism and international education. The Australian is reporting that new company directors appointed from today will have 28 days to sign up for a new lifelong identification number or face penalties. Australia's existing 2.7 million company directors will have until November next year to comply. The Australian is also reporting that upmarket department store David Jones, which is owned by South African retailer Woolworths Holdings, has finally returned to profit. And the Financial Times is saying that Fumio Kishida has secured a bigger than expected victory for the Liberal Democrats in Japan's general election.
Running through some of the other stories around today and just reviewing former New South Wales Premier Gladys Berejiklian's appearance at ICAC on Friday. She maintained that disgraced former Liberal MP Darryl Maguire did not receive any special treatment, notwithstanding the fact that they were in a relationship. She said he was part of her love circle, but the relationship wasn't sufficient enough to declare a conflict of interest. The inquiry did actually hear tapped phone calls between the two, in which Ms Berejiklian said former Treasurer and now Premier Dominic Perrottet did whatever she told him to do, and there may well be more today because Ms Berejiklian is back in the stand.
It's certainly very entertaining, Michael.
It sure is, if not a little bit sordid.
Retail sales jumped by 1.3% during September, according to the Bureau of Statistics, and retailers in Queensland and the reopening New South Wales benefited most. Nationally, retail spending is now 4.8% below its pre-Delta outbreak level, though it's still well above its pre-pandemic levels. People still have plenty of money in the bank, so sales should continue to climb in the run-up to Christmas. In other Bureau of Statistics data released on Friday, there was a solid lift in credit growth, and that reflects home loans. Investor credit was more subdued.
Australia's largest steelmaker, BlueScope, has done a deal with Rio Tinto to consider ways of reducing carbon emissions at the Port Kembla Steelworks in New South Wales. The two aim to build a pilot plant to test new processes. Steelmaking is obviously very carbon intensive.
Indeed it is. And one of the true legends of the Australian entertainment world, Bert Newton, died over the weekend, aged 83. As the Prime Minister said, there will never be another like him, and there won't.
Yeah, well said. What's the key overseas news this morning, Sean?
I mentioned the G20 summit over the weekend earlier in the program. Leaders of the world's biggest economies have endorsed a global minimum tax on corporations at the summit. We've spoken a bit about this in the last few months. US Treasury Secretary Janet Yellen said the deal would avoid a race to the bottom on corporate taxation. Good news, I think, for most governments. Also out of the summit, the US and European Union have agreed to settle their disagreements over tariffs on steel and aluminium. These were introduced under President Donald Trump and will now be partially removed, but not totally. One of the big trends since President Trump has been the increase in protectionism around the world, and I think anything that's done to reverse that trend should really be welcomed. And finally, Michael, Microsoft has regained the crown as the world's most valuable company. Its share price rose 2.2% over the weekend, taking its value to $2.49 trillion US dollars. Apple's share price fell nearly 2%, meaning its value fell to $2.46 trillion US dollars. Microsoft is number one again.
I know it's only Monday, but I reckon that is a front runner for the most remarkable story of the week. $2.49 trillion. It wasn't that long ago that we were talking about Apple becoming the first company to be worth $2 trillion, and now we have Microsoft nearly at $2.5 trillion. Amazing.
It is amazing. If you put the two of them together, that's 5 trillion US, which is, 6.5 trillion Aussie. It's not far below the total value of the housing sector in Australia. Remarkable.
That is incredible. All right, up next, Sean, is the daily interview. Steve Johnson from Forager Fund Management. This is a good one for investors.
Sure is. We went through all the companies he likes at the moment and the best way to find value in the share market.
All right, that's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Also, while you're there, make sure you check out the week ahead with our resident economist, Stephen Koukoulas. It is a big week coming up.
Sure is. Plenty going on, and Stephen's very excited about it all.
Yeah, absolutely, especially with the Reserve Bank Board meeting tomorrow. And if you have a little bit of time, make sure you check out the Sunday edition of Fear and Greed. It is, shall we say, a lighter look at some of the business news that's been doing the rounds. Always a lot of fun. That's also in the Fear and Greed playlist. Thank you very much, Sean.
Thank you, Michael. Have a great day.
It's Monday, the 1st of November, 2021. Make sure you followed Fear and Greed on LinkedIn, Twitter, and Facebook, and you can always find more information and all of those podcasts I mentioned at fearandgreed.com.au, where you can also sign up for our free daily newsletter. I'm Michael Thompson, and that was Fear and Greed. Have a great day.